hear often that responsiveness to challenges or to incorrect financial statements and or just getting them late is something the boards complain about often. Can you tell us maybe a story or a frustrating situation that you've heard from a board that makes you think of, how did it get to that point,
Sure.
before the board raised the red flag?
I think that poor service response is not just for accounting, but in kind of all areas that board members deal with is one of the main issues. When we take a look at all of the hundreds and hundreds of board members that have requested quotes from us, and we ask what their number one kind of concern is that they hope our service will solve. It's that service quality and responsiveness is the number one issue.
Mhm.
And for a board that is paying for service, right? That's the first type. You're paying somebody to provide the service, but you're not getting the service. You are constantly having to follow up with the company, chase down the information, and that is taking a lot of time. And it's frustrating because you can send multiple requests and you're not getting the information you need. So that takes extra time as a volunteer and it adds to higher blood pressure. So then it also adds to mistrust. Like, is there something that they're hiding from me, especially with financials? So you want to be able to get that responsive service. So either way, if they don't get back to you, you're going to be frustrated with that. Another story is talked with a community that was paying, a fair amount, $1,000 a month for financial reporting from a management company, and they were just doing accounting only. The They knew what they had in their bank account, and they know what the management company was showing on the financial reports, and they didn't line up. So the balances didn't line up. And so this treasurer was spending, he said, 10 hours a week alone just recreating financial reports in a spreadsheet because he didn't trust what it was being provided to them. And this is not to point out management companies. It could be any accounting firm, or it could be it could be anybody. But it is, if you don't have people that know what they're doing, it can create one, the board doesn't know in that dashboard of how they're going to operate their community, what money they have available to do the things that they're trying to do for the year, whether those are capital improvement projects or regular maintenance. And then secondly, it's going to take a whole lot of time for him. It was 10 hours a month just to recreate the financials. Plus, on top of that, he had other duties that he had to spend his time on in his role as treasurer. And so he said, it was probably like 20 hours a week that he was spending on community business, and he really didn't want to be doing this. So he was looking for a solution to help with that. And we've now helped him with that. And he's gotten his life back. And he's got accurate financial reports, and the board knows what they can do and what they can't do. So quality financial reports, responsive communication, all of that kind of comes together to give the board trust and confidence in their numbers.
So turning this around from the frustration of lack of responsiveness, but for a board looking for financial reporting, what should they expect from good quality service in that aspect?
You know, I have people that say people get back to us, but it takes a week. People get back to us, but it may take 10 days or 2 weeks. Sometimes nobody gets back to us at all. Nobody picks up the phone when we call. So emails go unanswered, phone calls go unanswered or returned. And so that is a huge stressor because you're trying to answer questions to your homeowners, maybe have all the information that you want to show at a board meeting and make sure that it's correct when you're talking to your other volunteer members or at an annual meeting. So it is very frustrating. I'd say the way that community financials handles service is, we put response times in writing, and and at all times it's within 48 hours and sometimes faster. So it's, we're focusing on responsive service because the industry is, notoriously bad at providing responsive service. And so when I would going back to my last career as owner and president of a management company, when I would go to see these boards that were making a change, I say, why are you making a change? The top two reasons why they're making a change was, one, we lost trust in the accounting. So we lost trust in how they're handling our money. And two was lack of service, lack of responsive service. So we have kind of structured our business to be responsive to board members and our customers. So we've got customer service team that handles homeowner questions, and we measure responsiveness for that. And about 2/3 of those get a live call answer when somebody calls in, and voicemails are returned by the end of the day. And then we're measuring email response times, and we also have client managers who are they're leading accounting teams, but their main deliverable is being responsive to their board members within that time frame that I just laid out, and that is by far superior in all of those than what the data would say about the industry, whether that's accounting companies or management companies or other service providers.
If you could give every HOA or condo board member one piece of financial advice for the rest of this year, what would that be?
I would say to budget properly this budget season. I have a lot of boards that I talk to over the years that feel like they don't want to increase their operating budget and they would prefer to pass through a special assessment. And I just think that that is not the correct approach. People want to be able to budget for their expenses, and that's part of the reasons why they buy into a community association. And by having adequate budget to take care of increased expenses and be able to stay ahead of any changes, so you may increase a little bit higher than you thought for things, but it gives you a little bit of cushion in case things change mid-year. And so you're going to stay on budget. You reduce the risk of special assessments. You allow people to plan their budget for their housing costs. And you're going to have an easier time at board meetings and also handling emails and phone calls and also at annual meetings if you do this. The other thing is you're also going to have enough money, hopefully, to be funding reserves. And so you're also putting money away with a surplus rather than trying to borrow money from the reserves and then pay it back later. And you're just going to get yourself into more and more trouble as a board. Stay on top of your operating expenses, and a better board for it, and a better liked board. You won't fear going out of your house. If any of these sound familiar, that is a good sign. It is worth having a conversation. Most boards that reach out to us tell me afterward that they wish they had done it sooner. The hardest part is usually just deciding to look into it. You can start at communityfinancials.com, our website. There's a scorecard where you can see how your current setup stacks up, and a cost calculator that shows what your community's accounting is actually costing you right now. If you want to talk through what a transition would look like for your community specifically, we're glad to have that conversation.